All right, so daily closing thoughts. We just got news from the Fed. I think the GDP came in lower, and also unemployment went higher. That's what I saw at a glance. I might be wrong, but that's what I remember. And we got the PCE, the headline, the CPI next, and we're into weekly resistance, and we're into the bull trap. So the slowest bull trap, we're extended above it. So it depends on where we close the week. On the faster bull trap, we can go a little higher, 4,100. So because we got one more news day and we're so close to that daily fair value gap, we're going to basically stay out of it until it's complete. If I were to take a look at this oscillator, this is basically saying, okay, it's time to look to sell or get in at a short. And I think it's approximately right. So when it came to this sell signal, the very next candle had a nice spike, and there's no way there's a high probability that we could get that spike, and there's a probability that it might fail here too. We just don't know. So the best approach is like a slow approach, and right now we're starting to flip here on the fast trail 3 minute and 5 minute hasn't flipped yet. So with the amount of volume that happens during Asia session, I'm just not going to worry about it. I'm just going to wait till the next day. And if we do get entries, I'll let the automation take care of it. So what do I see? Right now, we had a 12-hour break to the upside, but I'm just thinking it's a little bit of a fake out. I think the dominant story is this 3-day breakout to the downside, huge retest all the way deep into full extension of overboughtness into resistance of the bearish pattern, deviation, left shoulder, right shoulder. So that's one point of huge interest is this 3-day breaker to the downside, deep retest, not failure to take out these highs. It's a huge red flag for bearishness. So because of that, we're waiting for a 4-hour breaker, and this is going to be the deciding thing, the deciding factor of okay, the top is in. And this would be a confirmation that the top is in. I don't know if we're going to get a nice retest like we did here, but we're going to assume no. And we're going to scale as soon as we break to the 4-hour. We are going to shoot for our Hail Mary entry on this daily supply zone, 4,100. That's kind of what's been coming up in the forecast with Fibonacci measured move, whether it's on the 2,000 tick level or it's the 15-minute measured move, or it's the daily fair value gap, or a daily supply. They're all kind of saying the same thing, 4,100. So that's where I'm aiming. I'm aiming this being the Hail Mary entry. If we get it, great. If we don't, whatever. We are going to still wait for that 4-hour breaker to the downside, and currently the bot's off, so now it's on. We got a smiley face. So just in case, I'm going to remove, and then we're going to reapply. I think so. Over the night, I think the demo account changed and the password changed. So I'm just going to reapply these things. So market reversal, EA, and then put on those settings. Short signal, we'll do initial reversal, and then we also got to put it on aggressive. I think it's false on aggressive. Oh, there it is. It just popped up. Make sure it's true. There it is. Aggressive, true. So we're waiting for our initial reversal. It'll get in, and that's going to be the time, the confirmation that the top is in. So until then, we're assuming that this is the top, and that we're accounting for volatility. And then if we're correct, we get 2 entries in, and at a really patient manner. So other things that hint to me that we probably haven't hit the top yet is this VIX untested naked breaker. So a nice drop in VIX would create some volatility to the upside, which makes me think it would fill that daily fair value gap just enough uh, to fill on that daily fair value gap on the S&P 500, which you see specifically right here. This blue box, I drew it in. It's the wick low of the previous candle of the engulfing, and the wick or body high of the candle after the engulfing. And it creates this blue box, and it's an imbalance that I would like to fill. And I have my entry right at the bottom of the daily supply or the top of the daily fair value gap imbalance. So a nice spike into there would be a good representation if the VIX were to retest this naked breaker. So I don't think it's even worth looking at all the other currencies. It's all about this play, and the play is an idea, and it becomes more and more real in terms of numbers and theory becoming good practical application. Good practical application is theory applied over time. And we need time to go by for it to be labeled as good application. Right now, it's just a good risk to reward play. So we're going to play the play in terms of risk to reward, and the best risk to reward is getting in at exhaustion, and points of exhaustion would be at that daily fair value gap, daily supply, and then assuming that that's correct on the break on the 4-hour breaker, specifically either on this one or this one, it's the same thing. We get a 4-hour breaker, we get another entry to the downside, and we'll be scaling in just swimmingly. And if we were to put on mass cycles, so Q Spectrum 2 or Q Spectrum Plus, we got the, we'll go ahead and update it, might as well, just to make sure we're not contradicting any evidence that we see. All right, so we're still going on our way to the downside. That's good. That, I mean, from day to day, it hasn't changed until the weekend. So that's kind of just what we're suspecting, is that maybe foul play this Friday. And Decennials moving to the downside. Trading Spectrum for the best walk forward analysis moving to the downside. Q Spectrum 2, which is the committee of 5 or more cycles, heading to the downside. We got the higher that the price moves, the institutions are going more and more bearish positioning, and we got a 3-day breaker to the downside on market structure. So that alignment of those three things make it a really good case to sell the highs here, or sell at exhaustion, and sell at market structure break at a 4-hour time frame. If we get into exhaustion in our supply zone, I might just also go get in on a 30-minute break as well. But we have to be prepared whenever that time comes that we get that point of extension. Could be London Open. It could be New York Open right before the news. You don't know. And that's kind of why I have that, I'm prepared for a news day. I'm prepared for volatility. And the best way is to give it some breathing room. And this 4-hour breaker is a really good way to give that breathing room. Right now, I had some entries into the short side, but I took profit on it because, so this is the one that was really getting me convicted on just, being aggressive on a short side and just putting in some sell side positions, but I got rid of them because, tomorrow's a news day. So even though this is saying be positioned bearish on this oscillator, I really trust this, and it's thoughts until we get a 4-hour breaker or we get an extension, overboughtness or extension, I'm not gonna believe that we are in a position to roll over just yet. It we're in a middle of a range. That's kind of how I interpret it. I mean, we're a little bit over the fill of the daily fair value gap, just that daily resistance. That's what this line is, and it's just something. If it's in the between, I just don't trust it until it's fully confirmed something. It's confirmed exhaustion, or it's confirmed a break, a capitulation in bulls. And I need one of the two. I can't have in the middle. It's just not enough. And so I'm going to wait in terms of time frame for more participants to show up and cast their vote. As far as to share some experience that I'm going through. So I've been building up the E8 prop firm account. We are currently in profit, almost $200 for 1 week's worth of trading. So that's been really difficult for how slow the market's been moving. It's been buying the open breakout of the London session, which starts roughly at 3 a.m. It's 10 a.m. server time. New York Open is roughly, I think it's like 9:30 or 10 a.m. It's like 1600 on the server time. So if 3 is 10, and then 3 plus 6 is 9, so it'd be 9 a.m. is New York Open. But from the backtesting data, it says that London Open outperforms New York Open in terms of the breakout. So that's what I've been doing, and it's profited me currently 196.73 with a $10.45 loss. So I'd say that's pretty good in terms of profit reward. And we're getting ready for tomorrow, and I can't wait for the London Open tomorrow. Hopefully we get in the high at London Open, and we just don't know. But the profit target for phase one is $4,000. So I'm thinking if we get that big runner, that big move, that will put this one in the books. And moving on to phase two, maybe I can get phase 1A and 2 done, and I'll have access to a 50 grand account. I am curious to see what my max drawdown would be, even with a funded account. If it's going to be the same, or if it's going to be different. I just would like to see the panel of the funded account versus it being a demo. So that's pretty much it here. As far as Apex, I haven't been putting any trades. I've been just waiting patiently, and as you can see, we're inching closer and closer, and there's something that's off. ICT was kind of saying something a little bit about that on the Twitter Spaces, and he says something feels off, and I'm just following Michael Gayad and his thesis. He says that he suspects a lot of volatility come March or April, possible correction in April, and then credit crisis later in Q3, Q4. So I'm just playing all confluences that I see, whether it's institutional information, it's math cycle information, or market structure information. If I get more confluences, I'm going to believe more in one bias than the other. And right now, it's any kind of extension, sell it. Any kind of breakdown, sell it. So that's kind of where I'm at. We are in the bull trap on the fast and slow, and we have not yet closed the week. And that's going to be an important close on what we get going into the monthly open and quarterly open of this next quarter, in the next weekly open, and what kind of candle, what kind of market structure formation forms. If we were to take a look, just really quick, just what would make it more appealing to the short side is if we got maybe a complete correction, maybe a wick up, and then a complete shrink of the wick. I don't know how far down we would have to go, but a nice reclaim or close right at the diagonal trend line here, or maybe a close on the week at below 4,000 or 4,022. Take your pick. Right now we're at weekly resistance, so a failure at that retest would be indicative of wanting to test the lows. um, and push price the other way, especially in an aggressive manner too. Just because we're, I mean, we're in the middle of a banking crisis. We're 2 weeks in, and you got pristine, low risk collateral being in a shortage. 2 weeks after the interventions of the Fed, and it's a little fishy when lessons of Bear Stearns, where you're 2 weeks after an intervention of the Fed, and banks are still going after safe and liquid collateral, the best collateral you can get, and with it being such a shortage, it just makes you kind of wonder, like, okay, if the banks are doing this, they see something, they have some proprietary information that we don't, and we need to really listen. We need to really observe just what the financial institutions are doing, and if they're going after those treasury bills or 4-week treasury bills like it's going out of style, we got to, tensions are high. You got to just listen. Obviously, there's listening to the market, and then there's listening to the market. And I'm talking about the credit market. Obviously, some people are watching the discount window and the demand of money at the discount window going down, but at the same time, reverse repo is not looking good, or at least the demand for safe liquid collateral like the treasuries. Right now, I think it's still waiting for the people are paused everything, but with it being high after the interventions of the Fed, it just says volumes to me that something's wrong. So, anyways, like, it's something that you either you're with it or not. And if I'm getting all these signals to short, it's not only me. And if you were to think about it, if you got institutions acting in a rush to safety kind of behavior, and then you got traders like me looking at signals to short, it says something about just the overall idea of what's going on. And somebody is going to have a really bad day with call options one of these days. I don't know if it's going to be tomorrow or if it's going to be next week, but it's looking pretty bad. From each weekly close we get more information. But that's kind of what I would say is, like, going into this weekend with caution. Definitely don't be on the buy side until it's totally confirmed. And as far as a red alert status, as far as like high potential downside, these first 2 weeks of April are definitely red alert, DEFCON 1 status, because we just don't know, and there's a lot of aberrant behavior going on. So thanks for watching. Talk soon.